The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. And as you know, today is a P-index date, and it is 16 aspects. What that means, I'm going to try to make it as simple as possible. It usually means that you're going to see a spike on the chart. And what we have going on right now is we have an equal rally exactly to what we did the last time we came off of the solar eclipse. On the 20th, we rallied up for 3 days, the exact amount that we rallied up for 3 days this time. So this is where, if you're interested on the short side, this is the place to take a look at it. We're trading around 1307.75 in the S&P, and I think if it gets 5 points above that, this is certainly wrong. But right now, time is correct, and we will see if that's going to be the right thing to do. By the way, this was the birthday of W.D. Gann, June the 6th. He would have been 134 today, and I did study quite a bit about him, many, many years ago, and he was certainly a, very brilliant man. We also have Dr. Miller's birthday next week, but that'll be a little bit later in the week. The spike that we are expecting today, and we have 4 hours to go in the market, so if it's going to top, it should top right about in here. All you wanted to do now, if you're bearish, is you'd like to see it, the Dow close at 100 points or less up on the day. That would be the ideal situation. If you're bearish here, and if you're wrong, it's going to be up over 250 to maybe even 300, and that means that a major bottom is in, and that means that the Bradley model is probably going to be wrong for the next couple of weeks, because we've been in a really bad bear market since May 1st. We've had 2 rallies. One lasted 3 or 4 days back on the 20th of May, and now we're in the 3rd day of the rally here. And if that's correct, we should start down again. Now, if that is going to be the right way to play it or not, I don't know. But this is where everything comes together as far as what we look at with the cycles and everything is, and the amount of money that you have to risk at this level is very, very small, compared to at any other time. The problem is that you're up so much on the day. I just happened to take a look at CNBC before we came on the air, and I saw that there were, out of the 500 S&P stocks, I think there were 483 of them were up. So it's pretty hard to fade that, but at least this is where you dance if you came to the dance, because everything is ready for it to fall into place. But, we'll have to see how it closes at the end of the day and go from there. I also posted into the Tiger TV the Dow Jones Industrials. It is also doing the same thing that the S&P 500 is doing, and that is also, the same amount of rally is equal. And the markets repeat over and over again, and that's what we're looking at. And this is the repetition that we're watching as we go through this. Now, if we take a look at the overall, what we think the Bradley model is going to be doing in the next, few weeks or anything, I'm going to put that one into Tiger TV too, because if we've missed this major bottom, it would really be, something of a real surprise, because that was not supposed to come in until around, the middle of June. That's where we were expecting the rally to come in. This is the first really good rally we've had, since I believe the day of the solar eclipse on May 20th, and so this is what we're watching. So we have a P-index day today. There's 16 aspects going. We're expecting at least a pretty big spike, and we've certainly got the spike. The spike was to the upside, and we will have a better idea, of course, at the end of the day, what happens, because we have a long way to go before the close. No matter what, I think we're going to get a really good chance into the early August if the Bradley model continues to unfold like it has. we'll have a really good chance to reinstitute some shorts at that time. But by then, the pattern is going to be a lot different than the one that we're looking at right now. Now, the next thing I wanted to cover is I have to put just a minute. I have to take some pliers and pull the thorn out of my side. But it is the Treasury bonds. Folks, we've had a 10% drop in open interest during this run-up in Treasury bonds. It's gone from 800,000 open interest to 700,000. That is a very, very negative sign. And on both of those counts, it looks like we're looking at something that is going to be, at least it's going to come down, a lot more. Interest rates are going to be going higher. We're going to, look at both bonds and the Treasury notes, because the notes, being the shorter-term paper, they have the same type of, following when people come in to, buy these things. So this is why, we want to watch both of them, because each of them. But the thing that's happening today in the Treasury notes is really amazing, because we've had this is our third down day. We have a huge gap down. We've reversed everything over the past 2 weeks, and that's a very, very negative sign. That's one of the reasons why the market is probably having such a big rally, is the fact that it looks like the interest rates have finally topped. I had several people ask me, am I, depressed because I got stopped out on the TBT within 3 cents of the actual bottom? No, it's not being depressed. I'm a little sad, but it's certainly not depressed in any way, because it'll give us a chance to get back in. I was, always aware that this could possibly happen, and I had that order sitting in there for months. Had I been a little bit smarter, I probably should have changed it, just because of the really strong cyclical stuff that occurred between May 20th and June 4th. But in fact, I didn't do that, so I paid the price of taking a loss on the TBT. But we will get a chance to get back in it. I believe they're going to, go a lot higher on the interest rate front. That's just the way that the history says is what it should do, and from that level, we'll have a pretty good idea of what we're trying to do. The Treasury bonds themselves have also been, had some pretty big moves to the downside. We're almost, I'm going to put the monthly chart into Tiger TV so you can see this big butterfly that we've been following all along. And it went a little bit higher on the day when we had the jobs report that was so very, very bad. And we are below last month's close already. And so this is another, chance of it's getting ready to root. And if you take a look at the T-bond chart on the monthly when you go into Tiger TV, just look at the time period in 2009 when we had the straight-up move, when there was a panic, flight to quality, and the market went from 108 to 140 in 2 months. It moved 32 points and then dropped 32 points into March of 2009. And so, don't think that these things can't have huge moves, because they certainly can. So, this is part of what we're trying to do here, is to get on board and make the thing work as easily as possible for us, and that's the thing that is important. Now, we have been, we talked about several times. In fact, every time we're on the air, we always talk about the U.S. dollar and what's been happening with it. And as you know, we've had this beautiful ABCD pattern that has occurred, and we stopped right at pretty much the exact 61% retracement of this. And so it's been really really interesting to watch it unfold. People, they sometimes don't realize that these numbers pop up all the time, but they're not perfect. And this is what you really have to realize, is that it's something that's just there. But we were talking about this at 83 in the actually 83.03 in the U.S. dollar index, and we went up there to 83, I believe 53, and now we're trading at 82.35. And what we'll be looking for on the downside here is a move. The first part of this move would be to around 80.50. That would get the euro probably up to 126 to 127 if it's going to make that move. And believe me, the euro is still bearish, folks. It's just having a relief rally. It was down, I believe, 17 out of 20 days, much like our stock market was, and it's also, having the same type of relief rally. So they all fit together, and that's just money moving. And so the number that we're looking for in the dollar index will be at around the 80-50 level. Now, at the same time that we're looking at this dollar index, we were watching the commodity index because we had the crude oil hit the almost exact 786 retracement of the whole move that we've been watching over the past weeks and weeks. We thought it was going to hold at the 88 level, which was the 61% retracement, and we went through that on that really wide bar, and we were warning you that this is going to go down to the 786 retracement, and that is exactly what's happened. And we've had a really strong move of better than almost $4,000 on the crude oil coming off of the 786 retracement. And I know it's a commodity, but we'll cover the commodities more in depth tomorrow. But the whole world watches crude oil because it's based on people using more oil to drive around for vacations, and also using the things for manufacturing and things like that. And all the manufacturing numbers, as you probably are aware of, are coming in very badly today. The German one was really bad, and the one from Spain was really bad. But the market rallies in face of that, and that's not really anything unusual, because the news follows the trend, and these things have been going down for a long time, and now it's having a relief rally to the upside. So this is something that is to be expected, and we'll see. Now the rally back in the crude, if we get it, it could be really substantial, but we might have a further test than that, and that's the key to to what we're looking at. And this is only the second day up, so you can't really say very much with the crude oil, at that level, because of the fact that there's just no time to really do it. Now, the euro, since we would go back from the crude oil back to the dollar a little bit. The euro has had some really good moves here in the past 48 hours. We've had moves of 150 pips up, and then 100 pips down, and then another 100 pips up. So this volatility is telling us that it probably wants to make a little bit more of a bottom than what we've already seen. And but on the long term, we are looks like we're going to go to the 117 level in the euro without any trouble at all. It has several patterns that come together there at the AB equals CD level. They come in around the 117 level, and that's what we're looking at. We're going to take a little break here now to pay a few bills.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. Prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks. And I posted into Tiger TV the gold chart that we've been watching for quite a while. And, as you can see, that it's hit that 61% retracement on the long-term basis 6 times. And now we've had the big move, coming out here. We're up $100 an ounce in a matter of a few days, which is a pretty strong sign. And in addition to that, we finally broke above the 28.50 level in the silver. And, that's also, showing that it's breaking out to the upside. Now, we've had a little bit of an open interest increase in the gold, and a little bit of an open increase in silver, so that from the bullish side, that's pretty good. That's the exact opposite of what's happening in Treasury bonds and Treasury notes. As you remember, when silver was making its high back on the 29th of April last year at the 49.80 level, open interest was dropping as prices were going up. That means shorts were covering, and that means there was no new buying coming into the market, and that's exactly what's happened now with notes and also with bonds, and with the movement down sharply, over $5,000 a contract in the bonds in a matter of just 3 days. That's telling you that this probably thing is, and the interest rates are getting ready to move higher. Now, someone asked me a question, well, how's that going to affect the stock market? Folks, it didn't affect the stock market for QE1 or QE2. Why is it going to affect it for QE3? I mean, they have a little bit of a rally, but then the market goes down. So, you have to be able to just trade the patterns that you see, and not worry about what the fundamentals are, because frankly I don't know anybody that knows everything about the fundamentals. But when you're looking at a price chart, it is the sum total of all the buyers and sellers. You just look at the bar. If the prices are going up, there's more buyers. If prices are going down, there's more sellers. You can look at today, and there's more buying going on in stocks than selling, and there's more buying going on in silver and gold than there is selling. So that's the bottom line. And it's the exact opposite in Treasury bonds and Treasury notes. Even though there was a auction today in Germany for 5-year notes, and they went at 0.44%. In other words, less than 0.5% for 5 years, buying, German paper. So the rest of the world is still, scrambling for, low rates. And frankly, I think this is the trade of the decade. But we'll, history will find out if we're actually correct or not. But that's the bottom line of what we're looking at here. So the someone else asked me a question about the commodities, because we've had some really horrendous growing weather coming across the Midwest. The market was incredibly oversold, and we had we've been watching the DBA, which is one of the ETFs for the overall commodities, and we broke below the 61% on that way back in December, and that made us quite bearish on the the commodities. And what happened over the last couple of days that we have been alluding to this is the fact that we did come down and we made the exact 786 retracement in the DBA on the way down. That came in at around the 2550 level, and the exact 786 is 2585. So it stopped right where it should have. That was, that's related to wheat, corn, sugar, soybeans. Sugar still looks like a falling safe, but the others have actually bounced relatively well. And the crude oil is, it's a big component of the commodity markets, and that came off of the 786, quite well also. But if we go below that, all bets are off, and we're going to have a situation much like we had in 2007 and 2008. That's because I firmly believe the Bradley model is going to be right over the next 12 to 14 months. It's been acting pretty well. Today is a very critical day because of the fact that we have this P-index date. We're 3 days up. We've done the exact same moves that we've had in the other 3-day rally that we had off of the solar eclipse on March 20th. And so it's an important day today. And in fact, Basil and I think Steve Rhodes both pointed out that if we have a really strong move above 13,500, 13,600 in the Dow, that's 12,500, 12,600 in the Dow. That'll probably tell us that this thing is probably going to go higher instead of lower. So we must watch these levels for just being careful with the risk control. Okay, we're going to have another short break here, and then we get back. We will discuss some more markets, including the copper market, and 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful Chapman wave. Well, Basil has just announced a one-day online master trader course where he'll explain his Chapman wave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks, and the market is still holding up at this high level. We are approaching the 786 off of the May 29th low, May 29th high in the New York, in the in the Nasdaq up here at this 2540 level, and so they're equal rallies. Whether they're going to turn down from here or not, we have to wait and see. But this is what you wait for if you trade pattern recognition, type trading. So we'll see at the end of the day if this thing, or we could be out of it long before the end of the day if the market continues, to move up. Because at 1308, it was a pretty strong resistance level, and we are a point or so above that right now, and which is not a good thing if you're short, but it's still kind of early, to say that it's not worked. The main theme that I'm working on today is this P index date, because this index date is a very, very powerful one because it has 16 aspects. It would be very unusual to go back and see that this is not, a real strong spike on the chart. Now, someone asked me, well, could it be 2 days off? And P index dates are not off by 2 days. They're off by 1 day maybe, but not by two. In other words, it could have came in Tuesday, but not on Monday. That would have been too different, much different. But because Monday was basically the bottom from the lunar eclipse, So this is how I interpret it. Remember, it's my interpretation. I'm the one that is responsible for interpreting this, and this is how I interpret it. So this is my 2 cents worth, and it's pretty accurate. And they don't work all the time, but they have a high probability of working, and that's the primary thing that we're looking at are the high probability moves. And we came off of an incredibly oversold market. I mean, this thing had been down almost every day during the month of May, and so we are correcting that right now. The rest of the world, the charts on the other markets are pretty much going down still, but they're also having a little bit of a bounce. That's really what it's doing. Someone asked me a question on the P-index date, what it stands for. Actually, the P-index date was derived by Dr. Ruth Miller. She's my teacher and mentor. She's 89 in just another few days. And she's the one that showed me that the number of aspects that occur either positive or negative has a high probability. We tested it. Steve Rhodes has also tested it, and Frank Tauscher, a whole bunch of other people have tested it also. And it does have a pretty good, history of giving these trend change type dates, and that's what we look at. Dr. Miller I wanted it to call the Miller Index, but she would not allow that. This was 27 years ago when I wrote the book on astrocycles, The Trader's Viewpoint, but she made me call it the Pesavento Index, and then Frank Tauscher made it short to the P Index, and so that's where it gets its name. Someday there'll probably be some more studies on it, and they'll call it another name for somebody else that does the work, but that's where it came from. It has some pretty good probabilities, but it certainly isn't perfect. There's nothing out there that's perfect, folks, and that much I can absolutely assure you. So you always want to be remembering that men are often wrong, but markets are seldom wrong. So when markets go up, it's because they're going up, and that's the reason why they're going up. You don't have to care, what the news is or anything, because markets will go up for reasons that are far beyond what you can think of. As a perfect example of what happened to the Barings Bank many years ago when Nick Leeson was long the Nikkei futures very heavily when he was trading in Singapore, and sure enough what happened, there was a huge earthquake, and it destroyed his position and also destroyed the bank. So we've got a call from Keith in Iowa. Are you there, Keith? Hello. I don't hear Keith coming in. I don't know what's happening.
Larry,
did you pay your bill this month, Keith?
Can you hear me now?
You must have paid your bill. Of course
I did.
What
ran the credit
can I do
card
for
real
you?
quick. Hey, listen, Larry, I'm short the SPYs and have been for a while.
Mm-hmm.
We've come down through the 382 on the retracement to from last April.
Yes.
And it looks like we may be forming a B point here. I'm not exactly
we
sure.
Certainly could. What I would do today, if I were you, Keith, if you get above 1313 in the S&P futures, I would just stand aside. You'd still have a pretty good profit in it, but I would stand aside because this is a pretty strong cycle date, and if it fails, that means it's just going to go up into the the next cluster, which is way up around that 1335, 1340 level. So I wouldn't stand in front of it too much.
Okay, I appreciate that. And since we've broken that 382 pretty convincingly, do you look at the 618 for the next stop?
Yes, I do. I watch the 618, but this particular one, what I'm watching similar moves that I posted into Tiger TV. We're having the same type of percentage move. In other words, in equal points that we had between when we had the solar eclipse on May 20th. We rallied 2 or 3 strong, really days, then we went sideways.
Mm-hmm. Mm-hmm.
Well, this time we rallied 3 days, and we went straight up to make that same amount of points. That came in at 1308 in the S&P futures. So, we've actually, done that. Now, if we get much above it, that's telling me that it's not going to be working, and then we'll have to wait and see.
Okay. Hey, may I ask you one more?
Absolutely.
Talking about the P index date, if you have a big reversal like this, and maybe you've discussed it, but I haven't been able to listen in. If you have a big reversal on that day, do you expect that to negate? I think you said there's one day on either side.
Yes, that's correct. So it could go up a tiny bit higher tomorrow, possibly, but it has a band of one day. I mean, it's pretty accurate. And
okay.
So if the question that people ask is that if it's a magnet and it releases, and this thing could just go straight up a lot higher, then that's possible. Then you just have to stand aside. That's all you have to do.
Sure. Okay. Thanks very much.
That's why you wait one day. That's it. By tomorrow for sure.
Sure. Well, thank you very much.
Okay, thanks for calling in, Keith. Okay, and we have another call from William in Singapore. Are you there, William?
Yes, I am. Thanks for taking my call, Mr. Pesavento. Thanks for calling.
Okay, and what was your question?
I think looking at the gaming industries, in particular, LVS and Win, it seems that they have been dropping quite severely. So I was thinking whether this is would be the good candidates for bottom picking.
Well, yesterday, actually, it wasn't yet. Yes, it was the day before yesterday on Monday when it was we were coming into that full moon. The Las Vegas Sands, the LVS made an exact. To the exact, within 3 cents of the exact 786 retracement, at 41.53, and we've already rallied 10% off the bottom. So it did hit the 786 on that day, and it's getting ready to. With this gap up today, it looks like it has farther to go to the upside. Would be my assumption.
Okay, yeah, I missed
the other one. The other one you mentioned was
Win, WYNN.
Oh, Win. Okay, let's see if we can. See if we can find Win here, and we'll get a good idea. That's Stephen Win, right? In Macau, he owns. He's in really strong competition with Stanley Ho. Is that the guy that runs the?
Yes.
Yes. Okay.
Yes, correct. The Macau Casino. That's right.
Okay. Well, the Win is actually has in a little bit better chart than the Las Vegas Sands because it didn't make the 786 retracement. It missed it by about $1.50, and it also, of course, has a gap up. In fact, there's so many gaps up today that it looks like the market has made some type of a really substantial bottom in here, and could really take off just because it's oversold. We were down almost every day in May, so that's my assumption. So both of those look like they have made major support. If you've been watching them on Monday. It gave you a really good chance, to buy it because it hit the exact 786 in the Las Vegas Sands, and of course the Win, which sells a great deal, 2.5 times more money, missed it by about $2. So the Las Vegas Sands would have been the cheaper one to buy.
Okay, all right. Thank you very much, Mr. Pesavento.
Okay, thanks for calling in, William, and all the best to you.
Thank you.
Okay,
yes, thank you. Bye.
You bet. Okay, the gambling stocks have really had a pretty good move today, as everything else has. So it's just one of those days where it looks like we're going. Now we're 2 points above the price in the S&P, and like I said, if we get above 1313 in the E-mini, I would expect that this is probably is wrong, and we're going to have a much bigger rally than what we thought originally, because this is it's early in the day. We've got another 3.5 hours to trade, and crazier things can happen. But right now, it doesn't look too smart being short in here, and we'll have to just keep our stop working and see if it's going to work. Someone asked me, gave me an instant message to take a look at these gold stocks, and if you recall, those of you that get the newsletter, we've had some tremendous long-term pictures, in the and for some reason I'm just I'm unable to get it up on the long-term basis. I'll try it one more time. There we go. And we had some really good patterns forming just a week ago in the gold stocks when gold was down there at that 1522 to 1530 level, and that's pretty much what's going on. The other question that someone has asked me is what I'm looking for as far as a bounce in the euro. We've been going straight down in the euro when we got to that 123 level. We've already rallied a little over 200 pips. My guess is we could go as high as 500 pips to get it up to the 127, 128 level without too much trouble. That would be very close to the because the dollar index is 53% of the euro. That would bring the dollar index down from that AB equals CD point down to the 80-50 level, 80-50 to 80 level in that market. So that's another one that we've been watching closely. Now, since we were talking about the the currencies, we've been focusing on the dollar versus the Japanese yen, for quite some time, and we just missed a 786 retracement by about 17 pips on Sunday night, and we came within just a few pips of the 1747 level that we wanted to get to. It got to 1759, so we missed it by just a little bit, and we've had a really strong 3-day rally. Now, people have asked me, how do you enter that? Well, if it misses it by that much, you really, if you're trying to get in without risking very much like we do, you're going to miss it unless you're watching it on a shorter term time frame, and you go down to the 5-minute or a half hour and say, okay, I missed the bottom, and now I'm ready to buy it on a retracement. That's the only way that I can see that you can go in. It's not too much of a problem if you follow it intraday, but frankly, I don't like to look at the charts all day long. That's not a good thing to do. We've got a call from Bob in New Jersey. Are you there, Bob?
Good afternoon, Larry. Yes, I'm here. I wanted to mention to you, I have your Astro Cycles book, and it's a very interesting read. And
well, thank you. I hope. Thank you.
No, it's a compliment. I love the story you give in the beginning of the book, where you go through basically how you started trading and just the whole process, the people that you met along the way. And
that's been the best part of this is, trading is a journey. It's not a destination, and I've made a lot of really nice friends, a few enemies, but many, many more friends than enemies, so it's been a lot of fun.
It sounded like a nice experience. And I also wanted to mention that I use your 135 buy and sell signal that's in that book.
That is really I'm going to focus. I'm actually doing another book, and I'm going to focus on that. I'm going back and trying to find some of my old work that I did on that, going back 35 years ago, because it's such a simple thing to do, and it's an easy way to force yourself to trade with the trend, and it's really a great pattern. I'm going to be doing a webinar for TFNN soon, and I'm going to focus on that to show folks that if you would like to be trading with the trend, that's probably the easiest thing to do. We've got to take a little break here, Bob. If you'll stay with me here one more minute, I'll get back to you, okay?
Okay.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back. Bob, are you still there?
Yes, I am, Larry. I have one other question for you.
Sure, go ahead.
In the Astro Cycles book, the charts that appear there, how did you develop them? Did you receive the charts through the mail, or did you hand draw them? Or cause, things were a lot different back then.
There certainly were, because we didn't have a lot of the fancy computers. Actually, the man that owned Knight Ridder, we used to get our charts by special delivery on Saturday morning that were updated through Friday, and of course we didn't have any overnight trading, and we were talking about probably 50 major commodities, as opposed to, there's about 250,000 different things you can trade now. And so that's really where they came from. They were all, hand-posted, and I didn't have any of the graphic, the software programs that can do the software, the graphic things.
Sure.
So I had to do a lot of this by hand, and it turned out okay.
They were in a hard copy form, right? In a hard copy form?
Actually, that book was produced by Cal Poly University's publishing department. Not publishing. I'm trying to think. I always forget that word. That does the they do all the writing and stuff. I can't never remember it. But anyway, they actually did all the work for me to edit the spelling and help me with the graphics and everything. And then we took it to a printer, and I printed it out. And then we sold so many copies that it was eventually taken over by Traders Press, and later by John Wiley and stuff. So it was now you can do a book real easily because of the fact you've got so many software things to work with.
Well,
and not only that, but the computers, you can do the dates and everything so quickly. We had the computers back in those days, but now things are so sophisticated that it's real easy to do. And I happen to know that that MIT is doing a whole lot of work into the astrocycle programs. I'm very much aware of that.
It's a great read. I love the book.
Well, thank you very much. I appreciate the kind
I love
words,
the radio
Bob.
show you have here. If you get a chance, say hello to me, to Shelley and Confluence for me. I used to be in that chat room.
Sure. Yes, I'll be happy to.
I hope she's doing well.
Oh, they do. They're doing very well. As a matter of fact, I ran into a friend of theirs the other day, and they are doing quite well.
Great. Nice talking to you,
thanks for
Larry.
calling in, Bob, and I appreciate the kind words.
Yep.
Okay, folks, we're going to be winding down here in a little bit, and we want to remember now, if we get much above 1313 in the S&P futures, we got to bite the bullet because it could get all the way above 1320. This is a P-index date. Whether it works or not, we're not going to know till tomorrow. And I have the radio show for commodities tomorrow, which will be focusing on all of the grains and especially the crude oil and gasoline. We've hit some major bottoms in some of these things. I mean, the softs like cotton, cocoa, sugar, coffee, those still look horrible, but we've made major spots now on crude oil and gold and silver and copper. And so there is a chance here that, we could get a pretty good bounce, and I think it'll be a bounce, but eventually, I think we're going to be going a lot lower, sometime into 2012 and 2013. That's assuming that we have a 2013 because of the Mayan calendar. And boys and girls, that was a joke. I was trying to be funny. I don't believe that the end of the world is coming on December the 22nd, not after 5 billion years here. So, you hear all about it, Nostradamus. And I went to school with Nostradamus, and frankly, he flunked out of the 3rd grade just like I did. So be careful of what you listen to on the TV. So just keep in mind, keep your stops working in there. If you sold at 1308, keep it at 1313. And in the S&P, the gold looks still a lot higher. I believe we're going to get up to the 1390 level. We get above 1390 level in gold, we are going to be going towards new contract highs. That's my opinion. If we get above 1390 to 1700. So that's it. Everybody have a great